Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, January the 8th. We'll mix a quiet trade here overnight as we get closer to the pause, starting to tilt a little bit to the downside. The biggest feature to me is the continued rebound in bean oil prices, while meal is once again challenging key support levels below the market. Corn right now is down a little over a penny. Beans are down 3 to 4 cents. Meal is down about $4 to $5, with bean oil up about 60 points, perhaps drawing a little bit of support from higher energy prices. However, palm oil prices were slightly lower overnight. And wheat has also backed down a little bit, currently 4 to 5 lower in two-sided trade. Tomorrow we do have an abbreviated trading session closing at 12:15 Central Standard Time in observance of President Carter's memorial service. Weekly export sales will also be delayed until Friday, which is also the date when we get our most significant USDA reports of the winter. USDA will update their final production estimates from last year's corn and soybean production, at least final for now. We'll also get a look at stocks as of December 1st, updated WASDE balance sheets, including updated production from South America, as well as the USDA's first crack at estimating the 2025 U.S. winter wheat acres. The average trade guess does show the market is bracing for slightly lower corn production. 40 to 50 million bushels is where the average trade guess lies, pretty consistent with our expectation. The market also expects slightly lower year-over-year stocks as of December 1 and ending stocks. In soybeans, the average guess is looking for slightly lower production and ending stocks. However, we look for a slight increase on both. In wheat, the market does not expect much change in stocks. We look for about a 10 million bushel cut to 785 due to higher domestic usage, and we happen to be the very low end of the range of estimates. We look for acres to slip about 700,000 from a year ago, placing us at the lower end of the range. The average guess is looking for just a very slight drop from year ago acres. The only change that we expect from South America on Friday is slightly higher production. Soybean production up 2 million metric tons is our guess. From Brazil, the USDA choosing to wait another month to see how this hot, dry spell in Argentina starts to play out for at least another month. Yesterday's export sales in November I thought were supportive across the agricultural space, with corn, beans, and wheat all coming in above what the weekly inspections data suggested. Later this morning, we'll get our update from the EIA on the weekly ethanol production. Exports of ethanol in November were also quite strong, reaching a 7-month high at 188 million gallons. Very tight range overnight in March corn. I expect prices will make another run at taking out that 460 level. 468 is an upside target for us. That represents a 68% retracement of the high from last spring to the low here in last August. Strong demand, perhaps some concern over planting delays for the second corn crop in Brazil, should provide a pretty good floor of support above the 425 level for spot prices this winter. March beans, I think, could very well just chop around this $10 level here leading up to Friday's USDA data. If better rains do start to fill in over some of the drier areas of Argentina over the last third of January and into February, I think the path of least resistance would certainly start to tilt lower. However, that is a very big if. The upside also continues to be limited by weakening basis levels in Brazil. March oil is closing in on its 100-day moving average resistance at 42.40, and look for a big increase in exports there on Friday. Meal is approaching that $300 level, actually dipped below that here this morning, and wheat just continues to grind sideways, looking for some sort of a spark to stimulate some sort of short covering bounce. So thank you for listening, everyone. Have a great Wednesday.